happened in the world of crypto this week? Well, here to talk with us about that is Dan Raju from Tradier. Dan, welcome.
Hey, thanks for having me.
It's a pleasure to have you here. But before we get started and talk about your company, I'd love, for the benefit of our viewers who may not be familiar with you and your background, to give us an overview.
So yeah, my background, like I said, I've been in the space in the online investing and space in the trading space for a long time. My background, I have a master's in computer science, a bachelor's in chemical engineering. I've been a serial entrepreneur. I've served as a CIO for a few large billion-dollar firms. My calling has been on the financial technology side, so I've been spending the last close to 16 years in this space. But that's my background. Tradier per se, the Tradier that I had co-founded with a few of my friends, which has grown today to be one of the larger broker dealers in the country. Because it's a very, very simple, unique idea that has got us to the scale, and that is thinking of the financial markets not in terms of the same vertical way by which the legacy banks and the brokerage firms handle it, but thinking of the brokerage industry, which is the most critical fabric of the financial markets, as an unbundled service that can serve the traders much better than the existing model is serving them. So what we do at Tradier is we take the act of investing, the act of basically, taking your own hard-earned money and putting it into the capital markets that is currently controlled by the traditional large legacy broker dealers. We kind of have unbundled that and created the capability that people can invest and trade from wherever they are, whenever they want to do it, and however they want to do it. So we have imagined the brokerage. What we do is we take the act of investing that is locked within the four walls of a traditional brokerage firm, and we have unbundled it using a powerful technology called the APIs. And so that now you can technically go ahead and, well, if you're reading an article or looking at a chart or doing some analysis, hearing someone out, or any place anywhere that you actually create an idea, that you could be able to invest right from there and there, instead of taking and carrying that idea to your traditional or brokerage app and asking it to do it, or asking someone to do it for you. So that's the idea that actually created Tradier. Today, we have grown to just not be the act of trading, but the act of actually building investing applications. And we serve as an infrastructure fabric for over 290 companies.
Right.
290 companies. And by that, what we have done is we have become the infrastructure that's handling some of the most active traders in the market uses. So it gives, unlike a traditional brokerage firm, we have built an amazing perspective, a bird's eye perspective of just not one front end or one system, but across hundreds of applications that have been built. And those applications could be something as small as a person in the valley building the first interesting app, to some of the biggest and largest investing firms in the country. So we pretty much serve the entire spectrum. But what we fundamentally do is we take the act of investing and unbundle it using API. So it's very similar to what Stripe does for payments, if you think about that space, or Twilio does for the telecommunication space. Mm-hmm. We do it for the investing space. So that idea has got us to a point today where we're the most widely used API, one of the most highly built API, and we are growing, and we have grown through all kinds of market conditions, including now. It's a proven model, and we are proud of what we have built. But most importantly, we are proud by the fact that we actually are servicing the customer in a different way than how the market has been servicing them for the last 40 years.
Right. And when you say customer, is that advisor and retail investor, or both?
Yeah, so I mean, a lot of advisors use our system to build custom investing applications. Let's say some advisors are doing some very, very customer-centric investing strategies, and the traditional brokers just don't allow them to do that, right? Because it has to fit into their financial model. So people build an amazing digital investing experience on top of that, or people build, some of the most simple, trading out of a chart, trading out of a signal, backtesting, analysis, research, social, mobile. I mean, people have even built voice trading applications on top of us. So, that's how far it goes.
Right. And for folks who may be familiar with at least some of the new trading platforms like Robinhood, how do you compare and contrast to entities like that?
I mean, it's a different model, a different play, right? Totally different. Um, Robinhood provides a simple front end mobile app or a front end experience and is servicing a set of young customers, right? We are basically providing the capability that hundreds of Robinhoods can actually get into the market without having to build that infrastructure. So we come at it from a different way. That's more of a B2C business model, and we come at it as enabling the businesses that service the customer. So we're more of a B2B2C space. But at the end of the day, it's a totally different unbundled brokerage model where firms like Robinhood are saying, I control what the last mile looks like,
Mhm.
versus we are saying, hey, the last mile can take whatever shape it can take.
Right. So we here at finStream could create our own trading company using your technology.
And you can launch it in a week.
All right. Maybe we'll put that on the back burner for now. Talk a little bit. I noticed in the press releases that you have on the website that you've spent some time helping educate active retail investors. Tell me more about that.
See, at the end of the day, we've been in the space for a long time. The we've As we have grown, we have felt the social responsibility, and not social, the financial and fiduciary responsibility, as more and more customers have come to us through hundreds of these third party experiences, that it is important, particularly with the markets that we are seeing right now, right, to educate people. Education has to play an enabling factor. So at the end of the day, there's always somebody making money in the market, there's always somebody not making money in the market. But if we are the infrastructure that is supporting so many firms, we need to be able to distribute and enable a sense of education in the market, a sense of responsibility, right? A sense of compliance. I think these three elements, we take it very seriously. And so what we do is we partner with so many of our last mile platforms and promote education. So if you see, for example, we have two events going on this week, a couple of events going on in Las Vegas in the month of December. But we are constantly, as we are enabling new experiences, we are also trying to enable education. So if you think about what happens in the market over the last, there's a rapid graduation effect in the market, by the way. So what is happening in the market is, since 2016, about 25 million new traders have jumped into the market. The pandemic kind of put them in a box and let them all get into the market.
Mm.
But those are the times when the market was just going up. Most traders didn't have to do anything; it was just going up. But now, when you have markets like these, volatile markets like these, they need the education, they need the capability, the skills, the tools, the content.
Mm.
And so we have felt the financial responsibility to educate them. And so as a result of it, we have been promoting education, particularly when there's a graduation effect. All these folks are right now dealing with the different market conditions. They're all trading options, and they're trading more complex instruments like they ever did in the history of the market. And so we felt like we have to be the responsible party in the mix.
Yeah. It seems like in a world where you have $0 commissions, where you have meme stocks, where you have Reddit being the educator of choice for many first-time investors, that we've in some ways have given investors the keys to the car without the appropriate driver's education.
Yes, I see that is true. See what's and and it's kind of fascinating, right? It's sometimes hard to argue if that is good or bad, right? It's very hard to argue because we have an entire new generation that's come into the market, right? That's how we took a like, that's the way we took a look at it. We have an entire new generation, 20 in a market that has got less than 120 million funded accounts. If you add 25 million in a few years, right? That's a massive growth. But I think what has happened is those platforms that have brought these people into the market, right, have not evolved to basically go ahead and let them and be a part of their journey as they advance into more heavier and more complex instruments and more advanced market conditions. And so that's the reason why we have taken the mantle and said, oh, there's a graduation effect in the market. I'm glad they came into the market. Let us partner with since we have the power, let's partner with them and get them education. So that's what we're trying to do.
Right. And then from in terms of education, I suppose it's the gamut, right? It's everything from teaching them about fundamental analysis to technical analysis to everything in between.
Yeah, it starts from I don't know what I'm talking about to how do you basically do triggers, orders, advanced options, four-legged options trade. So we go all the way, and and we've also learned one more thing is education in the market, Robert, is not consumed the way that we all got educated 20 to 25 years ago, right? It is small, it's micro, it's fragmented, it's incremental, and it's collaborative, right?
Right.
And so we have so what we are trying to do now, that kind of a model has a mass distribution element of it, but at the same time, it has a lack of attention span to it when a person is learning. So we have tried to work with our partners to make it make content the way they're consuming it, but at the same time, let them go through the journey in an easy way. So we partner with literally tens and tens of good educators in the market who, I mean, if you just Google our name, you'll see so many educational events. And we have found that as a more effective way
Hmm.
to basically go ahead and help the customer. So
Yeah. So it looks too like you're using video. I noticed something called Options Brew TV.
yeah, so we use all kinds of stuff, right? So at the end of the day, if we spread education. First of all, I mean, we create good. We partner with our partners and enable them to create great content. And every partner has a market segment, has a customer segment, and so and they enable that content to reach in so many ways, right? Some platforms are more, for the more advanced traders. They're mostly for the age group of 50 plus, and for them video is an amazing way for them to get content. Option Grow is a part of that thought process, right? At the same time, you've got platforms that are so, I mean, for example, if I call my daughter who's in college, she's going to text me back, right? I mean,
Right.
that's the way that was. So they all consume, and there's a lot of text-based communication and education for that market segment. So um, you know for them, we actually use Discord and these kind of communities to educate them. So we've found a way by which, and the platforms know it best as to how their customers get it. So we just act as an enable factor. We do video, text. We have a newsletter called the Tradier Rundown. I mean, we basically organize events. We have virtual events, webinars. I mean, we do everything.
All right. So we talked about trading. I take it runs to the gamut, right? Stocks, bonds, ETFs, mutual funds, options you mentioned,
Yeah, we
everything
pretty
and
much do
anything.
every list, anything that's listed in the U.S. markets. We kind of support it.
Right.
So that's what we
Interesting.
do. Yeah, it's been great. So.
Yeah. So I noticed also on your website that you are doing retail trader sentiment surveys, and that in September you found that 55% believe the economy could find new lows.
No, I mean, you see, some part of, like we talked about education, some part of better helping our customer base is knowing them better. So we tend to do a lot of these surveys. Now, what I thought was fascinating, right? We're dealing with a different market, right? We're dealing with a different market where there's so much more under 35 age group in the market, right? But they have kind of hold up a little bit. So one of the stuff that you see right now is, see what happens. There's an interesting dichotomy in the market, and I'll tell you, I'll cover the survey from that context, right? There is an amazing dichotomy in the market. This is a dichotomy, right? The advanced, the sophisticated, the educated trader is hyperactive in the market today.
Mm-hmm.
He's very, very active. He's doing more trading than he ever did. The folks who basically are momentum plays, they're the younger generation, the first time traders, have, as the market has hit some bearish sentiments or bearish situations, they have largely hold up. So one of the stuff that there's an interesting dichotomy. Volumes are still as they are, or they're growing, but it is not from the young community, the same set of traders that have come into the market during the pandemic. They have slowed down. The folks who have become active more recently is folks who know the market, the more advanced traders, the strategy traders. So as a result of it, what you see in the market is a very, very interesting situation.
Mm.
Options, which is an advanced instrument, volumes continue to grow, right? Share volumes have tapered off because that comes under the early stage. When you first time investor, you think about how many shares of a company do I buy.
Yeah.
When you basically have become an advanced trader, you're playing with direction a little bit more. So the interesting dichotomy is you have growing volumes in some segments, tapering off volumes in some other segments, one segment extremely active and one segment kind of holding up. So we said this is an amazing time to basically do a survey. So that's what prompted us to do the survey is, where, and that's exactly what we found. And what we found in that survey, is people who are 50 years or more are more active than they ever were. It's an interesting thing, right? Number one, that's because they've been in the market for a while and kind of explains itself, right? It's been in the market for a while. They're basically, they understand the markets. They've been through a few cycles, for lack of a better way to say that. And so, and they know how to deal with the market. Options is an amazing instrument by which they do it. And what we've also found, like you said, 42% of the respondents think that, the recent market that they're more. 42% said that they trade more often than they trade before, right? So that's the more active segment, right? 38% of the people we surveyed, right, you know actually basically are still bullish about something like crypto and Bitcoin,
Right.
but are bearish in the short run, right? So it's kind of and it kind of explains itself, right? For example, and I'll give you a perspective on this. I think as see the Fed's interest rates, the trickle down interest rate strategy of the Fed. I'm sure they're doing it because they're obsessed with the word recession, and nobody wants that in their 10 years. And so, and they're constantly. I mean, they're doing. I mean, what they have done enough incrementals, and they're expected to do another two or three before we hit Q1 next year, or by Q1 next year. And so these kind of these kind of market conditions, Robert, are not good for the prices of crypto, because it takes crypto and puts it into a volatile, unreliable category, right? So it puts it into that. And so I expect crypto to basically go ahead, and as soon as the interest rate hikes kind of slow down, which they eventually have to stop, they just can't keep raising it forever. I think that'll stop by Jan Feb. I don't expect the Fed to do another more than two, or at the most three, maybe two interest rate hikes. There's too much political pleasure. I mean, there is a feeling in the country that that unknowingly we might be pushing ourselves across the cliff into a recession market. And so for all that reasons, I think that interest rate hike will trickle down, will stop, and then I expect crypto to come up. So that fits into what the customer is saying, right? That they expect crypto to be kind of slow, but expecting it to come up, and it kind of matches the analysis that we are fundamentally coming up. It's a whole bunch of amazing set of information that we have come up. I'm not to go into all this stuff. Right? A lot of people, majority of the people we trade say it's going to get worse before it gets better, right? But one interesting thing is just because they're saying it's going to get worse before it gets better, it doesn't mean they're not trading. They're trading more than they ever traded. So fascinating aspects have come out of that survey.
Yeah. So I do want to talk about crypto, but the other thing on my mind is, since you have a finger on the pulse of trading, in terms of option strategies, what are you seeing? People selling calls, buying puts, straddles? What's the sort of predominant strategy that you see?
I mean, there's a tremendous growth in single stock options. That's what is driving majority of the volume right now, right? And all kinds of strategies come into that feed into that structure. But at the end of the day, single stock options is so what we saw was, as the market basically, and literally today we do more single stock options trades in this country than the number of shares traded in the market. So it's fascinating, right? I mean, and so, for example, today, I'll be honest, from a trader perspective, 80% of our volume is options.
Yeah.
80%. And so it was just not the case a few years ago, right? So so I see a lot of the more recent trends we see in a more volatile and maybe a more bearish sentiment situation like this. We're seeing growth in two markets, like two option strategies at play. One is options on ETFs, huge play there. Traditional single stock options, huge play there. The size of the trades are much smaller. For example, a typical option trades where we used to do was more like 7, 8 contracts per trade. It's more hovering around the 6 right now. So but at the end of the day, I think you have the situation. If you ask me in the punch list on what I see in the options market today, I see a graduation effect that has brought a lot of traders to the market. Number one, lot more. We believe at least 12 million new funded accounts have been engaged in options trading in 2022 than the year before. So huge growth in the number of subscribers. And lastly is, and obviously there's two things that I mentioned is single stock options and what I call is options on ETFs is a huge growth. But one fundamental thing that's huge in the options market, if you think about, is there is a tremendous growth in the number of educators who have jumped into the market.
Mm.
I mean, massive growth. I mean, literally, we come across an educational firm, 2 new firms every day, right? So, I think it's all healthy. I mean, it's all healthy. I think the market kind of got recently distracted a little bit with some of these meme stock rallies, which I don't think meme stock rallies are going to be that prevalent anymore because there's a graduation effect in the market.
Mm-hmm.
See, meme stock rallies are created uh, because the existing platforms could not meet their needs. At the same time, they're all momentum plays. There's not much education in many of those cases. So as the market graduates and the early stage investors pull up, and the more mature investors are more active in the market, I expect the meme stocks to kind of go away. Much of the meme stocks are also driven by options. So I expect options-driven meme stocks to go down, rallies to kind of taper off. They'll never be zero, but they'll taper off. But single stock options and options on ETFs are in a huge rise.
Right. So let's turn our attention to the world of crypto and what's caught your eye in terms of recent developments.
A lot, I guess. But I mean, see, I think I might have subtly covered it before, right? I mean, kind of super excited that Bitcoin is just about touching 20,000. So the last I looked at an hour ago, it was like 19,999. So it's almost like rubbing his shoulder. So kind of excited, right?
Yeah.
From the fact, I'm a true believer that crypto is an asset class that is here to stay. But I still think the active retail trader has still not touched crypto.
Mm.
The very active traditional retail traders, semi-professional, professional retail traders, have not yet traded crypto. So I see 2022, the Q4 2022 and 2023, I see raise in crypto volumes largely driven by this community who are more experienced because of and just jumping into the market.
Yeah.
So if you ask me what catches my attention is this link between the interest rates and crypto, right? That link between the two fascinates me every day. And this is how I think the Fed is feeding interest rate hikes and uncertainty, right? And if you take a look at the last, three interest rate hikes, all of them have hurt the crypto pricing tremendously. They all have got at least 10% reduction in some cases, right?
Yeah.
And so and the fact that it's misconsumed, the interest rate hikes basically creates a level of volatility in the market, and that volatility indirectly categorizes crypto as a risky asset, right? It hurts it hurts the image of crypto from the fact that crypto was considered to be a hedge against inflation, and that's not, right? So there's quite a bit of education that market is basically occurring. But what I think is going to happen on the crypto side is, as interest rates hikes continue, that volatility is going to hurt crypto, right? But I think two good things are going to happen in 2023. That I think that'll totally change the face of crypto.
Yeah.
Three things actually. Three things. Number one is the fact that I think the interest rates hikes are going to slow down. That's going to stop the volatility and help crypto. Number one. Number two is also the fact that active traders are going to jump into it, which is actually going to make the volumes are actually going to create. If you have a lot of volumes, it creates a sense of stability.
Yeah.
The volumes are low right now. And lastly, and most importantly, is I always said this: regulation is the best thing that can happen to crypto. It is absolutely the best thing, right? There's a lot of noise and uncertainty that people fear when that will go. It's absolutely not. The reason why some of the most advanced traders don't jump into it is because it's not a regulated asset class. And I think the Fed, the SEC is just coming up with its first set. They've published their, not the actual regulations, but directionally how they're going to approach crypto.
Yeah.
And I see that taking shape in 2023. So I look at 2023 as a good year for crypto. Active traders jumping in, the price fluctuations kind of putting it to stopping with interest rate hikes, and regulation coming in, all of them are legitimizing the crypto assets, and it'll become a legitimate retail assets. I think crypto is bound to become, after equity and options, is bound to become the second largest investment class. Futures and forex will take a back turn a little bit.
Interesting. So one of the things that caught my eye in the past day or so is this news about Do Kwon and a $4 billion money laundering problem. Any thoughts about that?
I mean, I don't know. I don't know. I mean, I'm still reading and learning as what might or might not have happened. So it's hard for me to make a comment. But what's fascinating to me more than the actual incident is how the market how crypto has reacted to it.
Hmm.
A very mature reaction has certainly not basically, or not looking crypto, the markets in general have reacted to it. So I think for me, it kind of shows a maturity in the market a little bit. I
Yeah.
mean, certainly it caught a lot of news cycles from what has happened, but we have not seen, for example, traders trade on that basis to any great extent from our platforms. I did speak to a few of our partners, and nothing that actually was significant enough.
Right. And then also, most recently, people were talking about the ETH merge and what's happened in the wake of the merge and its decline in value. Any thoughts about what was, I think, heavily anticipated to be the opposite reaction of the merge?
Right, right. Yeah, I mean, see, I think the reason you got an opposite reaction to the merge is basically is basically it's not catching it's really not catching the reaction of the active traders in the market. See, I
Mm.
look at the opposite reaction. See, active traders look at the market through a certain set of essential fundamentals. If for them the fundamentals change, the volumes, the habits, and the market reactions change. So I spend so much time with active traders and how they trade and see how they basically impact the markets. And sometimes I feel that these kind of news cycles just don't get to them that much. And so
Yeah.
that's how I think about it. So I
Yeah.
mean, I focus on how the traders are behaving day and night, and I tend to find information that is interesting and information they will react to. And sometimes and they do an amazing job at actually putting that Chinese wall between the two.
Right. So, anything else that was major that caught your attention? We don't have to talk about Kim Kardashian and paying a fine to the SEC.
That that's interesting. Yeah, that's interesting. It did catch my attention, but for 30 seconds, and then I
Yeah.
just moved on. But
Yeah. All
I
right.
mean,
Well, we've covered a lot of ground. Anything we missed or anything that just bears reemphasizing before we wrap up?
no, I think the only thing that I see is I think we are going through a fascinating time in markets, right? Everything that we thought as instruments and what I call as KPIs and parameters that apply of how we predict the markets is just not true anymore because you're dealing with a 25% growth that have not been dealing with it. But I certainly think what's going to happen in the markets is volumes will be high, options is going to boom like there's no tomorrow, continue to boom, and crypto is going to find itself as a legitimate asset class. And that's how I think. I really don't think the doomsday that people are predicting with the capital markets is going to happen. I just don't see the drivers.
Yeah. Well, Dan, it's really been a pleasure chatting with you, and I can't wait to have you come back as a guest on This Week in Crypto. So thank you.
Thanks for having me. I really appreciate it.